2025 is here, and with it comes new opportunities to secure your financial future. Building wealth isn't just about earning more, it's about making smart choices, investing wisely, and staying disciplined. Whether you're starting from scratch or looking to level up your finances, this video will guide you through proven strategies for wealth building in 2025. From investing in the right assets to managing debt and creating passive income, we've got you covered. Let's explore the steps to build lasting wealth and secure the future you've always dreamed of. Step 1. Mastering the basics of personal finance. The first step to building wealth is mastering the basics of personal finance. Here's how to get started. 1. Create a budget. Use tools like Mint or YNAB to track your income and expenses. Allocate funds for needs, wants, and savings using the 50-30-20 rule. 50% for essentials, 30% for discretionary spending, 20% for savings or debt repayment. 2. Build an emergency fund. Save 3 to 6 months' worth of expenses in a high-yield savings account. This fund protects you from unexpected costs so you don't dip into investments. 3. Manage debt. Pay off high-interest debt like credit cards as quickly as possible. Use strategies like the debt snowball, smallest balance first, or the debt avalanche, highest interest first. By controlling your cash flow and eliminating bad debt, you're setting the foundation for long-term wealth. Step 2. Investing for growth in 2025. Investing is one of the most powerful tools for building wealth, and 2025 offers some exciting opportunities. 1. Stocks and ETFs. The stock market remains a cornerstone of wealth building. Invest in index funds and ETFs, low-cost funds that track market indices like the S&P 500. Growth stocks. Companies in technology, healthcare, and renewable energy continue to thrive in 2025. 2. Real estate. Real estate is a time-tested wealth builder. If buying property isn't feasible, consider real estate. Crowdfunding. Platforms like Fundrise let you invest in properties with as little as $10. REITs, real estate investment trusts. Earn rental income without the hassle of managing properties. 3. Cryptocurrency. Crypto remains volatile but offers high reward opportunities. Focus on established coins like Bitcoin and Ethereum, diversifying with blockchain technology stocks. 4. Alternative investments. 2025 is a great year to explore alternative assets like fine art and collectibles through platforms like Masterworks, peer-to-peer lending for higher yields. Pro tip: always diversify your investments to spread risk. Use platforms like Vanguard or Fidelity for traditional investments and Coinbase for crypto. Step 3. Creating passive income streams. Passive income allows you to earn money while you focus on other priorities. Here are the best strategies for 2025. 1. Dividend stocks. Invest in companies that pay consistent dividends. Reinvesting dividends accelerates wealth growth over time. 2. Real estate crowdfunding. Earn rental income or capital appreciation without owning a property. 3. Digital products. Create ebooks, online courses, or templates. Once uploaded to platforms like Gumroad or Udemy, they generate income with minimal upkeep. 4. Affiliate marketing. Monetize your blog, YouTube channel, or social media by promoting products you love. Earn a commission for every sale through your links. 5. Print-on-demand design t-shirts, mugs, or tote bags and sell them through platforms like Redbubble or Teespring. No inventory, no hassle. Step 4. Tax optimization. Paying less in taxes means keeping more money to grow your wealth. Here's how to optimize your taxes in 2025. 1. Max out. Tax-advantaged accounts. 401k. Contribute up to the annual limit to reduce taxable income. IRA Roth. IRA. Save for retirement with tax benefits tailored to your current income level. 2. Use health savings accounts, HSAs. HSAs offer a triple tax advantage. Contributions are tax deductible, earnings grow tax-free, and withdrawals for medical expenses are tax-free. 3. Claim deductions and credits. Work with a tax advisor to claim deductions for student loans, home office expenses, or childcare credits. 4. Harvest tax losses. Offset investment gains by selling underperforming assets strategically. A little planning can go a long way in keeping more of your hard-earned money.